This is Chapter 1, Concept Video 3. We're now going to look at different accounting terms. We're going to understand Luca Pacioli's language. It's the language of accounting. And Old Italian, capisci means do we understand? Alright, let's begin. Assets. Assets is what a business owns. Okay? That's what it is. Liabilities is what a business owes. That's people they owe money to. The equity is the interest of the owners in the corporation. Basically, it's the difference between what the business owns and what the business owes. That equals equity of the owner. Keep in mind the owners own the business. Now when we talk about a balance sheet, we're talking about a financial statement that lists the assets, liabilities, and the equity in terms of dollar amounts in a specific time period, and that's called a statement of financial position. It lists the assets, liabilities, and equity, and that is the basis of what's called the balance sheet equation. Assets, all the assets of the business, what the business owns, is either owed, is partly to people outside, but the balance is what remains to shareholders. Now when we talk about a transaction, that's important. Transaction is a business activity or event that causes a change in this accounting equation, assets equal liabilities plus shareholders' equity. So it causes a change in two places, either in the assets and the liabilities or in the equity. Now the term revenue is confusing to some people. People think revenue is profits. No, revenue is what a business earns by providing its service. When I provide a service, I fix a car, I've earned money. When I cut hair, I've earned money. When I sell you something, I earn money. That's what revenue is. It's not profit. Expenses is what I incurred in the way of cost in order to earn my revenue. I had to pay rent. I had to pay salaries of employees and so on. I had car expenses and things like that, delivery expenses. Those are expenses that were incurred in order to earn the revenue. Now the difference, of course, between revenue minus expenses is profit for our purposes right now. And that's reported on the income statement. That shows the revenue minus the expenses is the profitability of a business organization for one particular period of time. We'll explain that later. And we will also look at, this is also called the earnings statement, but we'll look at the retained earnings statement. That's the accumulated amount of profit that a company has earned minus the dividends that it has contributed back to the shareholders. And that is reported to you in a statement of retained earnings. So now to put some of this all together, when we say net income, we are talking about basically profit. Net income is, revenues is referred to as income sometimes, and expenses are outcomes. So income minus outcomes, or net income, is the same as profit. It's the amount that revenues for a particular period exceed expenses. Now the opposite of that is a net loss, where in this case the expenses were greater than the revenues. Some other terms we'll come across very soon in the course is accounts payable. And these are the amounts that are owed to suppliers who have supplied us either goods or services in the past. But they supplied it on credit, which means they gave us 30 days or so to pay for it. So that's why it's an account that we have with them, and it's going to be payable later. By the same token, we sell our product or services to customers, and we expect to be paid later, and therefore that's called an accounts receivable. They have an account with us, and they will pay up later. We've already came across the term stockholders and shareholders. They are owners of the corporation. They buy shares or stocks in the company. That indicates their percentage of the ownership. And when the company, because it's a corporated company, is a separate legal entity, when it pays back the shareholders' money, they do it in the form of what's called a dividend. And that is a distribution of income to the owners. It's not an expense to the business. So there we've covered some of the basic terms. As we go through this course, there will be more terms, and I will point them out, but you must just become familiar with the language. From here we continue chapter 1, but we look at financial statements, how we report all of these transactions. Okay?